Welcome back to the channel. Today we're going to be looking at uh, Taiwan Semiconductor Manufacturing Company, TSMC, see if it might be a good investment.
Yeah, they're kind of a powerhouse, but like behind the scenes. Not a household name really, like an Apple or a Samsung. But they're making the chips that are in like everything.
Yeah, and they're doing really well financially. Their latest report shows that their net income increased by 54.2% compared to just last year. That's massive. And revenue went up 39% in the same period.
Yeah, that just goes to show you the demand for semiconductors is huge. TSMC is in a great spot.
So you might be thinking, why do I care about semiconductors? Well, think about like AI, 5G smart homes, self-driving cars, all this stuff. All those technologies need chips, and TSMC makes a lot of them.
They're what's called a foundry, so they make the chips based on designs from other companies, like Apple or Qualcomm. So if TSMC is doing great, the whole tech industry is probably doing pretty good too.
Okay, so we've seen that TSMC is growing a lot,
Right.
but is it actually a good investment? Let's look at some numbers to see.
Okay, so one thing we can use is the price earnings to growth ratio, or PEG ratio. And basically it shows us if the stock price is matching the earnings growth. So a PEG under 1 could mean the stock is undervalued.
And get this, TSMC's PEG ratio is only 0.46. That's really low. Maybe the market hasn't realized how great TSMC is doing, or maybe there's something else going on making investors nervous.
Yeah, that's an interesting point. One thing could be geopolitical risk. TSMC is based in Taiwan, and things with China are kind of tense. So that might be making some investors hesitant.
That makes sense. We should also look at their debt-to-equity ratio, which shows us how much debt they have compared to their equity.
Right. A low debt to equity ratio usually means a company is in good shape financially. They're not relying too much on borrowed money. TSMC's is only 0.48, which is pretty healthy.
Right.
And it means less risk for investors.
All right, so now let's look at the price-to-earnings ratio, or PE ratio. This one tells us how much investors will pay for every dollar of the company's earnings. TSMC's is 25, which is about average for the industry.
Their price to book ratio, or PB ratio, is a bit more interesting. It compares the market value of the company to its book value, which is basically what their assets are worth on paper. TSMC's is 6, which is higher than the average of 4 for the industry.
So that means investors think TSMC is worth more than what's just on paper. Maybe they see that there's a lot of growth potential, or maybe they really value their competitive edge.
Yeah, for sure. But of course, they have competition from big companies like Samsung, Intel, and Global Foundries. It's a tough industry, and you got to stay on top of your game.
Speaking of staying ahead,
Yeah.
TSMC is known for their manufacturing. They make some of the smallest and most powerful chips out there.
Right now, they're making chips at the 3 nanometer and 7 nanometer nodes. That's crazy small. Like millions of these things could fit on the head of a pin.
Wow, and these tiny chips are powering everything, from smartphones to servers to even those driver assistance systems in cars.
Yeah, having all those different products is good for TSMC.
Mhm.
It means they're not just relying on one industry, and that makes them safer from big market changes.
So we've talked a lot about the numbers, but there's also this thing called earnings persistence. It's basically how consistent and reliable their earnings are expected to be in the future.
Yeah, and it looks pretty good for TSMC. They have a good history of meeting or even beating their earnings expectations. Plus, they've got these long-term contracts with some big names in tech, so they're not just relying on hype. They've got real partnerships, and they get results.
Okay, so their income's pretty predictable.
Yeah.
And that's important for investors who want stable returns.
Absolutely.
And it's not just about the money. TSMC is doing good things for the environment and being ethical too, which is more and more important to investors these days.
Yeah, they're investing in renewable energy, reducing their impact, and doing a bunch of social responsibility stuff. It's definitely in line with how more and more people are investing.
So TSMC is really doing well.
Yeah, they're a major player in a growing industry. They're financially strong, they care about sustainability, and they're innovative. But it makes you wonder, why aren't more people talking about them? What are we missing?
Yeah, that's what we're going to look into next. We'll dig deeper into some risks, like insider transactions and how the overall economy might affect them. Let's start by looking at insider trading. See what people close to the company are doing.
It's interesting, there haven't been any major insider transactions recently for TSMC. Kind of makes you think, if it's such a great investment, wouldn't insiders be buying up shares?
Yeah, it's not like a sure sign of trouble, but it's something to think about. We also got to consider the bigger picture, the whole economy. We're doing okay globally, but things could slow down. Or something unexpected could happen and hurt the demand for semiconductors.
Totally. The future looks good for the industry long term, but there might be some bumps in the road. Investors have got to think about how those bigger economic changes could affect TSMC.
Right. Another thing investors usually look at is dividends. TSMC does pay them. Right now, it's around 1.5% annually.
It's not the highest out there, but it's still something for investors who like that steady income.
True. And we should mention that TSMC hasn't announced any stock buybacks lately.
Right, buybacks are a way for companies to give back to shareholders. They buy back their own stock, and that increases the value of the remaining shares.
So maybe TSMC not doing buybacks means they're putting that money into other stuff, like building new factories in the U.S.
Yeah, that U.S. expansion is a smart move. It helps them not just rely on one place for manufacturing, but also strengthens those relationships with big clients and governments.
And speaking of relationships, TSMC has a really good reputation in the industry. They're known for being reliable, innovative, and having great partnerships, like with Apple, for example.
Yeah, that reputation comes from years of delivering quality and always meeting those tight deadlines. Companies like Apple work with TSMC because they trust them.
Right. It's not just about the technology and money, though. TSVs is also doing good things for society and the environment.
Yeah, they're involved in a lot of initiatives for education, conservation, community development, things like that.
And they're really committed to sustainability, trying to reduce their impact with energy efficiency and reducing waste.
Yeah, all that helps them look good and attracts those investors who care about ethical and sustainable companies.
Okay, but now we got to talk about the big thing, the geopolitical risks with Taiwan. We mentioned it before, but we need to really look into it.
Yeah, things between China and Taiwan have been tense for years. If things escalate, it would be a big deal. Not just for TSMC, but for, like, the whole tech world.
It's complicated for sure. If something happened to TSMC's operations, it would affect everyone who uses electronics.
Yeah, it shows that even the best investments have risks. And sometimes those risks come from things outside the company's control.
So what does all this mean for investors? We've seen that TSMC is growing strong financially, cares about sustainability, and is a leader in their industry.
But we also talked about competition, those geopolitical risks, and how investors got to do their own research and figure out how much risk they're comfortable with.
It's a personal decision whether or not to invest in TSMC. There's no right answer for everyone.
Exactly what's right for one person might not be right for another.
The important thing is to be informed.
Don't just listen to us.
Do your own research, look at different opinions, and think about what you want to achieve and how much risk you can handle. Then you can decide if TSMC is right for you. It's crazy, right? They're so important, but a lot of people don't even know about them.
Yeah, it's like they're the secret weapon behind all the tech we use.
We've learned a lot about TSMC today. Their financials, their growth, how they care about sustainability, their position in the market.
And we talked about the risks, too, like what's going on with Taiwan and the competition they face.
So as we wrap up, we want to leave you with something to think about.
It's like a challenge to keep digging and researching.
Here's a question for you, Go. If TSMC is so great, why aren't more people talking about it? Is it like a hidden gem, or is there something we're missing?
Maybe it's both, you know? Maybe those Taiwan risks are scaring some people away, even though TSMC has a great track record and seems set up for a good future.
Yeah, or maybe it's just that the semiconductor industry is so complicated. Not everyone understands it.
True, but that lack of attention could be a good thing for investors who are willing to do their homework.
Exactly. Investing is all about finding those hidden gems before everyone else does.
And TSMC, with all its ups and downs, definitely seems like one.
So keep researching, look at different opinions, analyze the data, and decide for yourself if TSMC is a good fit for your portfolio.
Remember, the best investments come from being informed.
That's it for this deep dive into TSMC. Thanks for joining us.
See you next time.